Hello, everyone. My name is Chris Gandhi, and welcome again to the Wilson Weekly, episode 106 on the Money Mentor podcast. I've got here the star of the show, Doc Wilson, with me, who's going to give us an update on the housing market as we come close to the end of the year. Hey, Doc, how are you?
Yeah, I'm good, Chris. Good to see you. And it's galloping along the weeks until the end of the year. We've only got 1 week left, not even that, of the notional spring selling season, which will end in the third week of December. So our auction markets are fading a little bit, but we expect that this time of the year, it's actually a good time to buy if we look at it in those seasonal terms, because there's fewer buyers and more sellers. So law of supply and demand means good time to buy, and perhaps those sellers can be leveraged a little bit because they don't want to be coming back next year to revisit the housing market. But we've got some interesting data today, Chris. We've got hot off the press the latest inflation data. And it's a bit of a good news, bad news story on inflation. It's the monthly data, of course. We have two data sets from the ABS on inflation, monthly data set and a quarterly data set. It's the quarterly data set that the RBA looks at in terms of their interest rate prognostications, their interest rate policy. So, but we still obviously look at these monthly figures because they give us a good guide as to what's occurring. And as I said, a bit of a good news, bad news story in terms of the latest inflation data. We've also got the latest data from the labour market. And good news all the way through there is that Australia still has a strong economy as reflected in the labour market data. So good news there. We're not creating jobs at the same rate as we have been recently, but gee whiz, recently it's been crazy. Tens of thousands of jobs every month being created, but still a low unemployment rate. We'll look at that in some depth. Maybe a couple of surprises in terms of where the top performing capital cities are in terms of the labour market. And of course, as usual, we'll finish off looking at the latest weekend auction data. We look at the weekly results on the weekend. And as I said, just some signs there, not signs really, what we expect this time of the year as the season runs out of days and weeks and weekends, that we're seeing some downward pressure, particularly on clearance rates. But nothing to panic about there. I know there's a couple of doom and gloom headlines out there reflecting on lower clearance rates, as there always is this time of the year, being meaningful in terms of downward pressure on the housing market generally, but that's not occurring. And next week, we're going to bring everybody the latest data in terms of house prices and rents. So I look forward to that one. But Chris, we could get started if you like, and look in some depth at that latest data that's come through.
That'd be awesome, Doc. Let's get cracking.
Thank you, Chris. Yes, and in conjunction with my friends at Infinity, My Housing Market brings you the latest data over the past week. It's all about putting together the various pieces of the jigsaw puzzle. That is the Australian housing market, so you can make more informed decisions in terms of buying and selling. And that's why we do that. And we look at all those underlying drivers, particularly coming from the economy, and particularly as it relates to interest rates, because, of course, interest rates are particularly important in terms of what happens in the housing market. So My Housing Market is my brand. As I said, we bring the Wilson Weekly to you, episode number 106. So we've been around for a while now. And we were one of the leading podcasts in financial services last year. So we certainly get plenty of traction, and thank you for that, because we are all about the current state and future prospects of housing markets, particularly the current state. That's why we come on a weekly basis, refreshing the data and bringing all the new data. So, as I said, you can put together that jigsaw puzzle and make an informed decision in terms of your housing market connection. So, it is the week ending Wednesday, November the 27th. It is the last week of November. Of course, that means we're moving into December now. We will have 3 weeks through December, and then it's Yahoo holiday season, and we really don't come back until February in terms of housing market activity. But that doesn't mean there isn't housing market activity. Certainly, data continues to come through. So it is important to keep an eye on the data as it's coming through, the economic data. But there's also some markets that are still active during that holiday break period of December, January, particularly the recreational markets, the holiday markets, such as the Gold Coast, certainly still has a lot of focus on buying and selling through the holiday period. So this week we're going to talk about, as I mentioned, the latest labour market data from the ABS, that's over October. Also, the latest inflation data, the monthly inflation data over October. And as usual, the latest auction results. So, Chris, let's start it off with the latest labour market data. And we still have a strong labour market. It is steady, so strong but steady, or steady but strong. And that's the results over October. So let's have a look at the key points. The jobless rate, the October jobless rate was steady at 4.1%, seasonally adjusted. Jobs increased yet again. We've had this amazing year or so of jobs creation in the Australian economy, whereby we've had month after month of tens of thousands of new jobs being created. Of course, that reflects the impact of the resumption of migration. But it's not just migration that's fueling that increase in jobs. We've had spectacular increase in jobs. It's also a high participation rate, and the participation rate measures the proportion of the potential workforce that is actually working. And that means we're bringing a higher proportion of Australians into the workforce than we've ever had virtually before. So there's enough jobs out there to be attracting people who might have retired, who might be self-employed, into the actual workforce. So again, we had a solid increase in jobs, up 16,000 over October compared to September, but it was down on the 64,000 rise that we had of September. So just starting to ease a bit that sort of spectacular jobs growth, and maybe that was to be expected, that it wasn't sustainable over a longer period of time. As I said, hundreds of thousands of jobs created over the past year or so. But we did see an uptick in the number of unemployed. They were up by 8,300, which followed a fall of around about the same number the previous month. So I guess offsetting the fall in the number of unemployed was a rise over October, offsetting that fall we saw over the previous month, September. As I mentioned, the participation rate just down slightly to 67.1%. That's still a very, very high number. In fact, it's a historically high number, because the September participation rate was a record 67.2%. So it really doesn't get any better than this: a high participation rate and a low unemployment rate. Interesting that Brisbane was the lowest for the jobless rate, at 3.3% of the major capital cities. So, quite interesting that that Brisbane has had a good. The data for the capital cities is not seasonally adjusted, so it can move around a little bit. But certainly, that's a good number for Brisbane. We had some other numbers from Brisbane we'll look at it in a sec. We sort of validate just how strong that Brisbane economy is. And we know how strong that Brisbane housing market has been over the last couple of years, particularly driven by that surge in interstate migration through the COVID lockdown period. So our jobless is still low. We're still creating jobs despite those interest rate increases of the past couple of years. Of course, we haven't had an interest rate increase for a while now, but we certainly had them in spades through 2022 and into 2023. And also migration, which doesn't necessarily... Every new migrant doesn't necessarily get a job, but even though we've had a surge in migration and higher interest rates, our economy is still ticking over quite nicely. Thank you. So if we look at the chart in terms of the long-term series of monthly unemployment rates seasonally adjusted, we've sort of plateaued at that 4.1%. We moved out of the low to high threes last year that we were tracking last year, which was clearly unsustainable, because we've really never seen a period of unemployment in the threes Well, we have to go back to the early 1970s to see that, and it was a completely different economy and society in Australia way back in the 1970s, which is the best part of 50 years ago. But we're tracking just around the same levels as we did in terms of the unemployment rate during that very strong mining boom of the late noughties. So, in context, historically, this is still a very low unemployment rate, reflecting just how strong our economy is. When we look at the capital city unemployment rates, we can see it says Sydney lowest there. It should say Brisbane is the lowest. But Brisbane is the lowest with the unemployment rate at 3.3%. Melbourne, the highest at 4.5%. Still a good number. Anything in the fours is a good number, but just reflecting perhaps the struggles of Melbourne's economy over the last couple of years coming out of a lockdown. But you can see there that the unemployment rates, with the exception of Brisbane, are all higher over October compared to October 2023. And as I mentioned, we've come out of those really unsustainable low to middle 3% that we had in unemployment, and now moving into something a bit more, I guess, rational in terms of those low to middle 4%, which still reflects a very good market for job seekers and still reflects the potential for upward pressure on wages, and also still a little bit of a quandary for the Reserve Bank, because it knows that low unemployment rates and strong markets for workers mean that there is the potential for higher prices as employers have to cover the costs associated with paying more in a highly competitive labour market. So, again, maybe a little good news, bad news there, but still good news there for Australian workers, with still plenty of opportunities out there. But maybe without productivity growth, it does mean a little bit of upward pressure on inflation, which of course means those the opportunity for lower rates is still not quite there. But we'll look at some data in a second that relates more directly to the outlook for interest rates. And as I said, Brisbane also has given us the strongest jobs growth over the last year. So not only the lowest unemployment rate, but Brisbane's creating more jobs than any other of the major capital cities over the past year. And that's a very strong result, up 6.6%. And Melbourne also not bad, given its higher unemployment rate, that it's actually created and it had an increase of 4.3% in jobs over the past year. So, let's not completely discount Melbourne's economic performance, because even though its unemployment rate is a little higher than the rest, it's certainly creating jobs at a significant rate, only overshadowed there by a very, very strong result in that in the Brisbane market. And of course, another factor that continues to drive confidence and activity in the Brisbane housing market, which of course has recorded spectacular growth in both houses and units over the past couple of years. So that's the labour market data. Let's look at the inflation data, which was out just recently, hot off the press. This is the October data. Inflation has fallen over the past year in terms of the rate of growth, but headline inflation, the October headline inflation was steady at 2.1%. So that's the growth in prices. This is headline inflation. And I'll just give a quick explanation. Headline inflation takes all the factors in the basket of goods that the ABS measures that reflects what we spend and gives us what our costs are typically in that basket of goods. But as I'll mention in a minute, underlying inflation is a different measure, and it takes out the volatile elements such as fuel and housing costs. So that tends to be higher because it's not exposed to the volatile elements. There's an argument that perhaps the Reserve Bank, which looks at underlying inflation in terms of its interest rate policy, that it should be perhaps looking at headline inflation. And that's a discussion that's happening internationally at the moment, because there is that same sort of disparity between the level of underlying inflation, which is typically higher, compared to the level of headline inflation, which is typically lower. So headline inflation, steady, just up 2.1% over the year to October. So that's quite a good number, and certainly a lot lower than what we've been used to. The underlying inflation, however, and this is the bad news, it increased to 3.5% from September's 3.2%. So as I said, we need to really be looking at the underlying inflation rate, because that's the rate that the Reserve Bank is looking at in terms of interest rate decisions. It has said quite consistently that its target of 2 to 3% is an underlying inflation rate target. It needs to have a sustained period in the middle of that range, so 2.5%, before it considers cutting interest rates, or before it, considers that it's got inflation under control. So it has said it doesn't think that's going to happen until 2026. It is looking at the quarterly data set, so we need to wait for the 3 monthly data sets when they come out. The next 3 monthly data set will be for the December quarter. That will come out in February, just before the Reserve Bank meets for the first time in 2025. And on these figures, we're not really going to see, we're certainly not going to see any sustainable period in terms of quarters until perhaps the middle or end of 2025. And that's exactly what the Reserve Bank has been saying lately, that they don't think we're going to get sustainably into the mid-range of the target with underlying inflation until 2026. So all those predictions of lower interest rates early next year are not listening to the Reserve Bank, or looking at the figures that the Reserve Bank looks at, such as the underlying inflation rate. So we can only be guided by the Reserve Bank, and they've clearly said that in their analytics. So again, unfortunately, I said underlying inflation increased to 3.5%, so we're heading in the wrong direction. And that's up from September's 3.2%. The significant contributors to headline inflation were food up 3.3%, recreation up 4.3%, and alcohol up 6.6%. However, the sharp falls that we've seen in the inflation rate, the headline inflation rate, and the underlying inflation rate has also fallen, has been due to a big fall in the price of fuel. Listeners out there wouldn't be surprised, viewers out there wouldn't be surprised at that. All you have to do is look at the cost of petrol at the Bowser at the moment. I saw a one that had $1.50 on it recently, so that's a lot lower, almost $1 a litre lower than where we were paying a year ago. And that's what's happened. The international price of oil has fallen, and inflation as a result has fallen sharply. So over the past year, the price of fuel has fallen by 11.5%. That's a little higher than the fall we had over September, which was down 14%. And of course, that's really impacted, because it has a significant weighting in the basket of goods, really has impacted the inflation rate, not just the headline inflation rate, but the underlying inflation rate. And the other big contributor to the sharp fall that we've seen in inflation over the past few months, annual inflation rate, has been electricity. Electricity was down an amazing 35.6%, electricity costs, and that was a record fall in the electricity costs over a year. It was significantly more down more than the previous month, which was 26.1%, which was the previous record fall in electricity over a year. So down 35.6%. And of course, that is due to the government subsidy on electricity, $300 per household. So electricity costs have fallen sharply as a result of the government subsidy. Of course, that comes out of taxation revenue, so I guess you're paying for it in a roundabout way. That's been, the reason why we've seen this big fall in electricity, which is a part of housing costs, and why we've seen the fall in inflation as a result of that. So it's sort of left field in terms of the impacts, but unfortunately, goods and services prices are still heading upwards, or certainly haven't eased, which is a reflection again of employers having to push up prices to cover strong labour demand, strong demand for labour, pushing up the need by workers, or the capacity of workers to ask for more in terms of their pay. But the other point to that is that really something that we haven't had any really control over is the price of oil and that's fallen away sharply. And really, we could sort of pose the question if we had left interest rates where they were, we might have got a lower inflation rate just because fuel has fallen, and then the government's action on providing a subsidy for households for their electricity bills. So maybe there's a question we could have left interest rates where they were, and we'd maybe be at the same place where we are now in terms of the inflation rate. But that's a debate for another time. You can see there the chart for underlying inflation just started to pick up now, up to 3.5%. The US underlying inflation rate is 3.3%. We are at 3.5%. So some similarities there in the US interest rate. However, having been cut by 1.25% is now just above the Australian interest rate measure. So let's have a bit of a closer look at the relationship between the price of oil and inflation. You can see how the price of oil there, and we can actually look at what the price of oil has been over November, because we're just about at the end of November, and we can look at the average price of oil over November. It'll change marginally perhaps, but it's fallen again over November, even though there was, look at that, an uptick over October in the price of oil. And guess what? There was an uptick in the underlying inflation rate. So that is a very strong relationship that we can see there. And as I said, it shows that the fall in the price of oil has really been a key driver of lower inflation over the past year or two. And we've got so far some better news because oil is continuing to fall. So we may see a falling away of the underlying inflation rate over November. So, but it's still way too high at that 3.5% when we're talking about the capacity to get into the target range of the RBA, and that means hopefully meaning lower interest rates. So you can see there the change in the monthly oil price, and we're tracking it into November, and this is the latest data as of today. So even though we're still seeing an annual fall in the price of oil, the international price of oil, it's not falling at the same rate as it was over the previous couple of months, but it still is good news because it's falling compared to where it was a year ago, which means that the inflation rate will be lower because of the significance of the price of oil contributing to the inflation rate. And here we can see the chart for oil itself. So you can see there that oil continues to ease. Latest data, it's now under $70 US a barrel. It really hasn't been affected by all the issues in the Middle East, which looked like being a serious impediment to oil production. But that's been largely ignored, and the price of oil is continuing to fall away. I think the Saudis, one of the big contributors to that was the Saudis deciding to no longer have a target of $100 US a barrel for their product. As a result, we're seeing that underlying fall in the price of oil, which is good news, as I said, because as we've said today, big discussion on this, but I think it's important that we need to watch what happens with oil if we're looking for lower inflation and if we're looking for lower interest rates as a result. So latest auction results to finish up, Chris. We had auction clearance rates and listings were both lower over the last week ending last Saturday. And that's no surprise. As I said, the market is fading. We've only got a couple of weeks left of the season. A lot of buyers have bought, so fewer buyers. Even though listings are still reasonably high historically for this time of year, the motivation for sellers is reasonably strong because most of them would like to clear their properties before the end of the year. So that does result in lower clearance rates. But we've still got mixed activity happening in terms of what's happening regionally in our big capital city markets. I'll talk about that in a sec. So there were fewer numbers of auctions conducted compared to the previous week, and clearance rates were also lower, and that's likely to continue, as I said, over the next couple of weekends or next couple of weeks as the season ends. So let's have a look at the numbers. Sydney auctions well down over the week compared to the previous week. Clearance rate's still quite reasonable in Sydney, 67.2%, but it's certainly fallen away from the 70% pluses that we've had through the earlier parts of spring. But listings still well ahead of where they were a year ago, and the clearance rate not too far away from where it was a year ago in Sydney, Chris. So still quite reasonable results there in Sydney. And I must say that it's been interesting that the higher priced regions in the Sydney market, I'm talking the Northern Beaches, the North Shore, Lower North Shore, Upper North Shore, and the eastern suburbs have performed quite strongly over the past few weekends. And that's really put a marker under the Sydney auction markets. We've seen some quite strong results there. And that's what's keeping those clearance rates in the mid to high 60s. Melbourne also down in terms of the number of auctions conducted last week. Clearance rate was up a little bit in Melbourne, but it's been tracking in those mid to low 60s for quite some time now. We've been talking about a potential revival in that Melbourne market. Really hasn't occurred during spring. It sort of held its own, but that's about it. And it's still it's opposite to Sydney, it's still the higher priced inner suburban markets in Melbourne, such as the inner east, the inner south, and the inner city that are dragging the chain, really struggling to find buyers there, that part of the market, which has been the story for some time now, and has been a significant factor of the underperformance of Melbourne compared to the other capital cities. 63.9% clearance rate, and around about the same numbers as a year ago in terms of the clearance rate and the number of listings. Brisbane listings picked up as its clearance rate picked up as well, but still what we call a typical clearance rate there in Brisbane, now tracking in the high 40s, low 50s. And Brisbane has a different culture in terms of its attitude to auctions, tends more to be an adjunct to a private treaty marketing mechanism, unlike the Melbourne, Sydney, Adelaide and Canberra, where they have more of a pure auction market marketing attitude. Adelaide, similar auctions down a little bit, clearance rate down a little bit in Adelaide, but Adelaide's certainly come off the boil compared to those remarkable 80% results, near 80% results we were getting out of Adelaide week after week. And Canberra, up and down as usual, that Canberra market, listings down and clearance rates down in Canberra. A little bit like the Melbourne market. We've been expecting a revival in Canberra, just really hasn't happened this year. So our expectations again are for next year's revival in the Canberra market. So when we look at the longer term trends on a capital city by capital city basis, you can see there the Sydney market has eased as we typically see the spring market progress, and certainly well down on those 70% plus rates it was getting earlier in the year. But as we can see a year ago, it's the same sort of story, the market easing from 70s into 60s. A little bit more consistency there in Melbourne, as I mentioned. Most of the year, the Melbourne market has been tracking in the mid-60s for clearance rates, down a little bit, that seasonal effect with the other markets apparent in Melbourne. Brisbane has also faded a bit over November, but as I said, it's starting to look like more of a normal Brisbane market in terms of auction results. Those 60% plus rates we were getting earlier in the year were very atypical of the Brisbane market, and just reflecting how strong buyer demand was in Brisbane. And we know that has translated into very strong prices growth. Adelaide, as I said, similarly to the rest, has fallen away over November, but it's come through a remarkable period of very strong clearance rates in the mid to high 70s, but now a bit more of I guess you call it typical Adelaide market, but again influenced by the end of the year, and the same story there for Canberra. So if you want the latest results in terms of the auction market, then they're available on my LinkedIn account, which is Doc Andrew Wilson at LinkedIn. Every Saturday night gives you the full week's results as of the Saturday, around about 6 to 6:30 p.m. So that gives you each capital city's clearance rate, listing numbers, compares it to the previous week and the same week the year before. And if you're looking for the full national report, that's also available on my LinkedIn account on a Sunday, and that gives you the regional breakdowns for Melbourne and Sydney, as well as the top 10 sales for each of the capital cities over the week. So if you're looking for the latest weekend auction market report, there it is. You can scan the QR code, take a picture of it, and it will give you a link to a PDF file for the latest weekend auction market report. And we'll finish off as usual, Chris, with a plug for our My Housing Market Infinity Housing Market Suburb Data app. I think I said housing market twice there, but anyway, it's a really great little app that'll help you in real time determine what's happening in each suburb in Australia that has data. So we update it all the time. There is a link to that app, and also a QR code that you can scan it. And just a heads up that you have to get a password for it. So it's password protected. You get that through Infinity, but it's well worth getting hold of. I'll give you a couple of screenshots from the app. It's a great little thing to put on your phone, because at any time you can scan what is happening in the Australian housing market on a suburb basis. So it covers every suburb in Australia with data. It's updated frequently, so it's a real-time data model. You can scan it. You can filter it, for price or rent. We're filtered it here for price. Where you can filter it for the state, outside capital city region, or the capital city region. So we've filtered this for the Sydney region, capital city region of New South Wales. We're looking at Blacktown there, where you can filter it for house, unit, or townhouse, filtering that for house. And you can also filter it for the number of beds. So we're looking at a 5-bedroom house in Blacktown. These are the current asking prices. So this is telling you what vendors are thinking about in terms of pitching their property to the market. So they're, of course, advised by agents. So this gives you a great, almost real-time valuation for what properties are worth, certainly what the asking prices are. It's not just the median asking prices, it's also the low and the high. So you get the range of what's being asked, and also tells you the number of properties that are currently for sale. And we can do exactly the same thing for the rent market here. So we've got a screenshot there for Blacktown's rental market data. Again, some great insights there. If you're a homeowner, a potential buyer, or a potential seller, you can get the latest information there. And we've also introduced something for investors here, and this tells you where, for each of those regions, also filtered for the type of dwelling, and also the number of beds, where the top 10 yields are. So this shows you return on investment currently, and these are the top 10 yields in Sydney currently on a suburb basis. It also gives you the vacancy rate, the current vacancy rate, so we've updated that, and also the number of properties that are for sale and for rent in those top 10 suburbs. So that's a great little part of the toolkit for investors, particularly looking to see where the best returns are, and help to do the modelling on identifying suburbs which have the best proportion of supply and demand, as well as the highest returns. We're going to add to that with the actual value of sale prices on the suburbs over the past year. So you'll be able to see what prices have been actually realised over the past year for each of those suburbs. So look out for that. Great little app, Chris, and it's certainly something you assists you with your insights into the housing market. Next week, as I mentioned, we're going to have the November house and unit prices. So basically, tells us what's happened in 2024 with 1 month to go. Also, look at the latest home building approvals, which have been looking a bit better in terms of house approvals, but are still not very, very bleak in terms of the number of apartments being approved for building. And as usual, the latest auction results. So if you've missed the report this week, or you want a backup of the report, you can scan that code, and that'll give you a link to a PDF file for today's presentation. So that's all from me, Chris. We've sort of finished just about right on the money, and we'll be back for episode number 107 next week with lots of good data, particularly the latest. Let's see how the house price data has panned out on a per capital city basis, houses and units, and just a little bit of a teaser that we're not going to be too far away in terms of price growth for the national capital city house, for national capital city houses, than where we were last year. So this year's been a consolidating year on the rebound growth we got last year. So, but we'll find out which are the top performers or not with the latest data next week. So I look forward to seeing you then, Chris. Thank you for today.
Thanks, Doc. Insightful as always. And thanks to everyone for tuning in. See you all next week.
See you next week.